Hi, I'm Bobo. In this week's recap, Chief Executive John Lee announced the revival of the Kai Tak Transit project. According to the policy address, the proposed mass transit system will connect the runway area and the Kai Tak MTR station. This bodes well for the Kai Tak project KT Marina, which was launched a day before the policy address announcement. Developed by KWA, Wheelock, and China Overseas, the project is set to launch an additional 118 units on Sunday at a discounted average price per square foot of 20,988 Hong Kong dollars. That's 6% higher than the first batch of about 19,800 Hong Kong dollars per square foot. According to the developer, the newest batch will range from 5.89 million Hong Kong dollars to 15.46 million Hong Kong dollars at 18,528 Hong Kong dollars to 26,384 Hong Kong dollars per square foot. The project has received over 1,000 checks for the time being and is 2 times oversubscribed. The developer added that about 30% to 40% of prospective buyers were mainlanders. Next, launched the day after the policy address, Emperor International's South Sky development in Aberdeen received about 300 votes. Based on its first batch of 55 units, the project was more than 4 times oversubscribed, with sales to start early next month. Until then, the project will be launching tenders on Tuesday and Thursday for 4 featured units, all located on the 5th floor. These units measure between 245 to 365 square feet. Other developers also reduced their prices after the policy address. Southland in Wong Chuk Hang saw a 30% price cut with lowered prices for 41 units and increased discount rates. The 41 units included 30 studio apartments and 11 two-bedroom units with discounted original prices ranging from 8.86 million Hong Kong dollars to 17.44 million Hong Kong dollars. After the price reduction, prices dropped to about 6.3 million Hong Kong dollars to 13.37 million Hong Kong dollars, indicating a reduction of 23% to 29%. Next, the Rating and Valuation Department released the Property Price Index for September at 332.1 points, down 1.7% month-on-month. The rental market, however, continued to grow 0.6% month-on-month. In addition, the Housing Bureau announced that the private first-hand residential market could expect to see about 107,000 first-hand private properties supplied over the next 3 to 4 years, with 2,000 new units quarterly, marking a return to historical highs. On that note, a number of disposed sites are now ready for construction involving 20,000 units, with about 68,000 uncompleted flats for sale and 18,000 existing flats in leftover inventory. Looking at the first-hand market after spicy tax reduction, transactions saw a 40% increase week-on-week. But with no major new developments for sale, only 34 deals were recorded over the weekend. Southland in Wong Chuk Hang recorded the most transactions, with 11 units sold at reduced price. Meanwhile, the Holborn in Quarry Bay and Villa Garda 3 at Lohas Park recorded 4 cases each. Meanwhile, the second-hand market saw a rise in prospective buyers after the reduction of cooling measures. However, second-hand trading volume remained unchanged as buyers await the launch of future projects. Over the weekend, Hong Kong's 4 biggest real estate agencies recorded 3 to 9 transactions for the city's top 10 blue-chip housing estates. Among them, Centerline recorded 6 transactions, down 40% week-on-week. Midland recorded 7 deals, down 30% week-on-week. Given the reduction of cooling measures, some optimistic homeowners did not hesitate to slash home prices, even if it meant selling at a loss. Let's check out 3 such cases. After the policy address shortened the special stamp duty to apply to homes resold within 2 years instead of 3 years, one owner at Lohas Park's Sea to Sky project opted to sell their flat early. They had bought the flat in April of 2021 for 19.8 million Hong Kong dollars and held the property for more than 2 years. Although the flat was first listed at its original purchase price, the owner had to make several reductions before the flat eventually sold for 16 million Hong Kong dollars at 15,180 Hong Kong dollars per square foot. Ultimately, the owner lost $3.8 million and the flat depreciated by 19%. Our second case comes from Alto Residences, a project with some units subject to insufficient valuation, where one homeowner left the market at a loss. This was a 3-bedroom unit measuring 629 square feet. It was originally listed for 16 million Hong Kong dollars, higher than the original purchase price. However, due to insufficient bank valuation, the flat was eventually sold at a reduced price of 10.88 million Hong Kong dollars for 17,297 Hong Kong dollars per square foot, leading the owner to suffer a loss of 4.44 million Hong Kong dollars, indicating a depreciation of 29%. Homeowners at City One Sha Tin, one of the top 10 blue-chip housing estates, also recorded large losses. This was a 3-bedroom apartment measuring 707 square feet, which sold for 8.98 million Hong Kong dollars at 12,702 Hong Kong dollars per square foot. The original owner purchased it for 11.38 million Hong Kong dollars in 2019 and faced a loss of 2.4 million Hong Kong dollars. Looking ahead to this week, it's expected that the U.S. Federal Reserve will pause interest rate hikes. We'll have to see at its next meeting this Thursday. Today, the government will be releasing Hong Kong's gross domestic product for the third quarter. Financial Secretary Paul Chan Mo-po estimates that there will be slow growth. That's all for this episode. See you in the next.